Assalamualaikum. We are going to meet again for the new topic. Our topic for this time is bad debt recovered, and also allowance for doubtful debt. So I'm Dr. Lizz from UITM Terengganu. So good to see you again. So are you ready for the new topic? Let's go. Okay, now what is bad debt? Okay, so if you read you read your book, you are going to see that bad debt is actually about this. When you sell goods on credit, okay, your customers come to you but they don't pay you immediately, so you sell your goods to them on credit. Okay, so when you sell goods on credit, then what will you have? Okay, seems like you will have accounts receivable. Okay, account receivable are your customers who do not pay you when they buy goods. So you give them some amount of time for them to settle their debt. So this is what we call accounts receivable. So you may have many account receivables who come to you and do not pay. Okay, so all of them are your account receivables. So account receivables are our current asset. Okay, please remember in your statement of financial position, under current asset, you have one item there that we call as account receivable. Okay, so this is actually your asset. Account receivable is our asset. Okay, and then after that, what happened is this. Not all account receivable can pay you. Okay, not all of them can pay you. Some of them cannot pay. Okay, this is due to various reasons. For example, they go bankrupt. Some of them may die and do not pay their debt. And then some may run away. Okay, not everyone are honest with us. So some of them may just run away and leave the debt behind, do not come back. And so what happens is that if this is the case, then we are going to have what we call as bad debt. Okay, so this is what we mean by bad debt. So bad debt are actually the account receivable who do not pay their debt. So we will have some amount. Let's say there is one account receivable who cannot pay their debt, and the amount is 1,000. And this 1,000, because you can confirm that you cannot collect this debt anymore, so this 1,000 here will become our bad debt. So when it is a bad debt, what do we do with it? It will be treated as our expense. Okay, bad debt is our expense, and when it is our expense, then it will go to our SOPL, statement of profit or loss. Okay, so it will appear in your SOPL as one of the item in your expense. Okay, so this is how you treat the bad debt. And the same amount also must be deducted. Okay, so you need to deduct from account receivable, because your account receivable here has got to be clean from the amount of bad debt. So whatever amount account receivable in the trial balance must be minus with the bad debt first before you can post it in your statement of financial position as your current asset. Okay, settle about bad debt. But then now what happened if one day your debtors or your account receivable come back to you? Okay, we will see what happened here. Some of them might come back to you and then they say that I want to pay my debt. Okay, maybe it happens years after that, after you have already closed your financial statement for this period. Okay, so you have already write off the bad debt as an expense in your statement of profit and loss. You have minus it from your account receivable in the statement of financial position. But then one of them come back to you and then say, hey, I want to pay back my debt. So what are you going to say? Are you going to say, no, 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 you don't have to pay me because I have already written it off as my expenses? You can do that. Of course, you can always do that. But in accounting, the treatment in accounting is that when someone who cannot pay their debt and you have already written it off in your SOPL, and they come back to you, say that they want to pay you back, then we are going to welcome it, okay? Because this is what we call the bad debt recovered. Okay, so now you will have what we call the bad debt recovered. When they want to pay you, we welcome it. It becomes our bad debt recovered. Okay, so when we have a bad debt recovered, then how do we treat this bad debt recovered? Okay, as you can see, if it is a bad debt here, then it will be treated as an expense in our SOPL. But if it is a bad debt recovered, then it will be considered as our revenue in our SOPL. Okay, so this is an opposite here. Here it becomes an expenses, but here it becomes a revenue in your SOPL. Okay, and the amount that you have received, remember the amount that you have received here, this will increase your cash. If your account receivable come to you and pay by cash, then it will increase your cash. But then if your account receivable and give you a check, then it will increase your bank account. And this will go to your SOFP. Alright, statement of financial position. Okay. Now you understand now the difference between bad debt, okay, here, and bad debt recovered. Okay, so we compare it with, okay, now we look at allowance for doubtful debt, and then let's see what is the difference between bad debt and also doubtful debt. Okay, allowance for doubtful debt. Okay, previously we looked at this accounts receivable, right? So for accounts receivable, you know that if you can confirm that you can no longer collect the debt, then it becomes your bad debt. Okay, however, we know for sure that not everyone in our accounts receivable will pay their debt, because we know that not everybody can pay their debt. Okay, so because of accounting is very conservative, then we will need to make some provision, okay, for the amount that may not be collected. You may not be able to collect this amount, all of this. So we have to make some provision, okay? How much is the provision? So it depends. Sometimes it is about 3%. It depends on the question. Sometimes it is about 6%, or it can be 5%. Okay, so this percentage has got to be from your accounts receivable. Okay, so how do we treat this allowance for doubtful debt? Okay, so as you can see, allowance for doubtful debt must be deducted from account receivable in your SOFP. Okay, after this we are going to see our illustration. How do we deduct allowance for doubtful debt from account receivable? Means that in your account, in your SOFP here, we will have account receivable minus with allowance for doubtful debt. Then you will get your net account receivable. Okay, so that is one treatment. Another treatment, okay, because every must have some other treatment, must have two treatment, then this is another one. Okay, so how do we adjust for another treatment? Okay, so one in SOFP, another one will be in our SOPL. Okay, so what do we do in our SOPL? You will need to check if the amount of AFDD for the current year increase or decrease from the previous period. The amount from the previous period will be shown in your trial balance. So you have to compare the new amount for the current year, okay? Check it against the amount in the trial balance. Then you determine if it increase or decrease. If it increase, it will be considered as your expense in your statement of profit or loss, and then you will need to put it to minus it from your gross profit. But if it decrease, it will be considered as your revenue, and then you will need to include it in your SOPL under the revenue to plus it to your gross profit. Okay, so this is how we treat allowance for doubtful debt. Okay, after this we look at the illustration. Proceed now with an illustration. Okay, this is an illustration that we are going to see. Okay, so in this illustration, what we are going to do is that we are going to look at one sample question in your book. If you look at your book, question number 1, then you are going to see this is the question. Okay, the trial balance of Anna Sendirian Berhad as at 31st December 2019. So this is the trial balance given to you, and this is the additional information, and then with 1 to 3 there, and then you are required to prepare the financial statement, which is the statement of profit or loss and statement of financial position as at that date. Okay, so what are we going to do? Okay, I am going to ignore the first one because I assume that you already know how to adjust for this. So we are going to look now at number 2 and number 3 because this is related to what we are learning today. Okay, so number 2, what we have here is one of the debtors is proven could not pay his debt worth 600 ringgit to the business. Okay, now class, what is this? Okay, this is what as you can see here, it says that the debtors is proven could not pay his debt worth 600. So when you read the question, then you must already be able to identify that this is actually the bad debt because the customer cannot pay you. Okay, so it is already a bad debt. When it is a bad debt, you are confirmed with it, then you go to trial balance, you try to find the bad debt. Okay, here it is. I have spotted the bad debt here. And then if you go to the amount, you are going to see that there is an amount of 400 listed under the debit column here. Why is it under the debit column? This is because bad debt is treated as an expenses, and expenses is of debit nature. So that's why it will appear on the debit side. Okay, so it is 400. So we already have the amount of bad debt, the amount of accounts receivable that has been written off because your account receivable cannot settle their debt. But then this amount 600 is a new amount when you want to close your statement. Okay, when you want to close your statement on 31st December 2019, you find out that another 600 has been considered as bad debt and cannot pay their debt. So this amount is not yet included in the 400 that you have in your trial balance. Okay, it's a new amount. Okay, so what do we do now? This 600, you must include it here because it has not yet been included in our trial balance. Okay, so you will have a new amount here, which is 1,000. Okay, so instead of 400, you will need to take the amount of 1,000 here when you want to prepare your statement of profit or loss. So this is the statement of profit. We will see how are we going to write it in our statement of profit or loss. Okay, let's say statement of profit or loss. We look here at we have here the gross profit. Okay, we don't want to look at this. And then here we have plus with revenue. Okay, and then here we have minus it with expenses. Okay, So this is the extract of your statement of profit or loss. Okay, now when we do this, as you can see, we have 1,000 here, which is our new bad debt account. So bad debt, like I said just now, will become our expenses in our SOPL. You have to minus, so this amount will appear here. Bad debt, and the amount that you are going to put here is 1,000. Okay? And then after that, 600 here, because this is the new amount that you have not yet adjusted, then as you can see, you know that it will reduce your accounts receivable. So you go up again and try to find the account receivable, and you can see that this is the account receivable. Okay, once again, if you can see that your trial balance is given in this format, account receivable here, and then you have account payable on the same line. You have this amount 46,326,940 on the credit side. So you must know which one is the account receivable, which one is the accounts payable. Okay, please try to understand accounts receivable is always our asset. Asset is of debit nature, so whatever you can find under the debit column will always be your account receivable. Whatever amount on the credit side here will be your accounts payable, because this is your liability which has a debit at credit nature. Okay, so we have the amount of our account receivable here is 46,300. Okay, so this amount here has not yet been deducted with the bad debts that has been discovered when you want to prepare your financial statement. So what we do now, this account receivable must be minus first with this amount. Okay, so minus with 600. Minus with 600, so you are going to get a new amount here, which is 45,700. Okay, so what will be the effect? How are you going to record it in your statement of financial position? Now let's say that this is your statement of financial position. Okay, in your current asset, what do we have will be your net account receivable. Okay, account receivable, we have already calculated the new amount here. We are not going to take this amount 46,300, but we are going to take the new amount 45,700. Okay, so that's it. So for this information number 2, you have adjusted it twice. Number 1 is here in the SOPL, and number 2 is here in your SOFP. So you have done 2 adjustments to this statement. So now it is completed. Cancel out number 2. Okay, now we focus on number 3, allowance for doubtful debt. Allowance for doubtful debt is to be increased by 430. This is one type of question that can be asked. After this, we will look at another type of question. Okay, another type of sentence that will be given to you. Okay, so it says that allowance for doubtful debt is to be increased. When you see the word increase here, then your job is easier now. Okay, when it say increase, then we know that your allowance for doubtful debt is increased. Remember from our last slide? Okay, when it increase, it will be considered as our expenses. Okay, and it will go to our SOPL as one of our expenses. Only the amount that has increased. Here, the increase is about 430. So what do we do? When you know that it increased, then your job is easier. You just go straight away to SOPL, and then under expenses, because it increased, then you just write here increase in AFDD. But when you answer the exam, please do not put this. Please spell it, okay? INCREASE. Okay, how much does it increase? By how much? 430. So straight away, you just write 430. So the question is actually done to help you. Okay. Okay, so actually we go back to our number 3. It says that AFDB is to be increased by 430. So now what I want you to do is I want you to go up to your trial balance, and then you will relocate that this is actually the allowance for doubtful debts. Okay, find the allowance for doubtful debt. How much is the balance that we already have in our trial balance? And you will see that this is the amount 2,800. Okay, so we have 2,800 here. This is already the current balance that we have in our account. Okay, so you already have 2,800. Okay, so if let's say when you look at your trial balance here, you cannot see any amount of allowance for doubtful debt. In that case, please do not worry. Okay, because it shows that the business so far has not yet provided for such allowance. Okay, so meaning that this is the first year the business is trying to provide for the allowance for doubtful debt. So meaning that here the balance is 0. You don't have any balance. Okay, but if you can find in your trial balance the amount of allowance for doubtful debt this much, as you can see, the allowance for doubtful debt here is on the credit side. Okay, before I forget, why? Because allowance for doubtful debt here is actually a contra account. You remember the contra account? It will reduce the main account. So allowance for doubtful debt is actually another contra account that is trying to reduce its main account. The main account here is the accounts receivable. Okay, accounts receivable. So that's why you will see after this in your soft P that allowance for doubtful debt will reduce the accounts receivable. Okay, after this we are going to look at that. Now, this amount is what you already have at the end of last year ataupun at the beginning of this year, 2,800. But then if you can see number 3 here, it says that the allowance for doubtful debt is to be increased by 430. Then it means that you will need to increase. Increase means you have to plus. How much do we need to plus? Another 430. So when you plus it with 430, then you will have a new amount here, which is 3230. Okay, so this is your new amount. So this year, it has got to be this amount. Okay, so we don't want to look at this amount again. Okay, so what do? Just now we already include our account receivable here. Okay, this is our account receivable. So now we minus it with allowance for doubtful debt. The amount is 3230. Okay, and then when you minus 45,700 minus 3230, then you will get here your new account receivable, or what we call the net account receivable, is 42,470. Okay, so you have made one adjustment in your SOPL, another adjustment in your SOFP. So meaning that is all the adjustments that you need to do. Okay, now understand that? Okay, so like I said just now, I would like to show you another type of question that might be asked regarding the allowance for doubtful debt. Okay, How is it? Now let's see. Let's say now the question here says that instead of giving you this question, the question say that allowance for doubtful debt here is to be, I cancel this sentence, is to be made at 3% of account receivable. Okay, let's say this is the question. How are we going to do that? If this is the question, then how are we going to do that? Okay, now when the allowance for doubtful debt is to be made at 3% of account receivable, so what you have to do is you will need to calculate how much is the 3% of account receivable. Okay, so when you calculate 3% of account receivable, you will need to take this amount, not the amount given in the trial balance, okay, because this amount has not yet been deducted with the bad debt. So take the net amount here, 45,700, you times it with 3%, then you are going to get a balance of 13, you will get 1371. Okay, so this is the new allowance for doubtful debt. So actually, this is the new amount. Allowance for doubtful debt is to be made at 3% of account receivable, means that your new amount for allowance for doubtful debt is 1371. Okay, so because of that, instead of putting here this amount, then account receivable here, you just straight away minus with allowance for doubtful debt here, 1371. Okay, so to replace this one, then you get the total here. Okay, so this is one adjustment that you have made. Another adjustment is you need to compare it with the current balance in your trial balance. So we have here 2,800, remember? Okay, so this new amount, 1371, you must compare it with 2,800. Okay, so you will get a difference here of about 1429. 1,429. Okay, so what is this? Now you see, currently we already have 2,800. Okay, now we want it to be 1371. So you can see that the amount has already decreased. Okay, how much? 1,429. So the decrease in AFDD here is increase in AFDD. So when it increase, then what happen is that you remember the increase in AFDD will be treated as your revenue in SOPL. Okay, so this amount you are going to put here, okay, decrease in AFDD 1,429. So this is how you resolve for it. So this is one adjustment, this is another adjustment, then number 3 is done. Okay, so I think that's all for this topic, bad debt recovered, and also allowance for doubtful debt. I hope that you can understand what I'm trying to teach here. So if you don't, please do the exercises in the book, and then if you don't understand, then we can have our discussion again after this. Thank you so much. Good luck.